Let's Get Down to Business is presented by Bravo, the marketing arm of Ash Brokerage Corporation, the practice enhancement company. All this week, it's multi-life and executive long-term care insurance. And on today's show, the business benefits and tax advantages of long-term care. And with me today, nationally recognized long-term care expert Maria Sarchi. Hi everyone, I'm Steve Savant, syndicated financial columnist and contributing author to Backroom Technician. Let's get down to business. Well, welcome to the show, day 3. Wow, we're talking about, I have to say, this is kind of new territory for the savant. I mean, you know, we're talking about group, we're talking about multi-life.
Yes.
And I'm taking copious notes here because I'm on a learning curve here and being tutored by the best in the business. Let's just talk about this because when I talk about benefits, business benefits, it sounds so lopsided. Well, the employee gets all the benefits. What is some of the perks, besides our traditional issues of recruiting and retaining, what's really good for the benefit for the employer? Why am I offering this?
Well, from the employer standpoint, certainly the benefit that they're offering to the employee is big. You know, being able to offer a solution for one of the greatest risks that we will all face in retirement, a long-term care event, which costs could today amount to anywhere from $50,000 to $100,000 a year. Offering that benefit to the employees.
That staggers a consumer's mindset. Yeah. I mean, even advisors, I'm thinking, I'm laying down at the lower end, $50,000 a year. Yeah. For how many years out generally would you say is?
Generally 3 years, that's today, 2013, and that's not in consideration of a cognitive impairment. A condition or illness such as Alzheimer's can have somebody in a facility for 7 to 10 years, so considerably longer.
So that really compounds your extended care when you have those kind of issues.
Cognitive impairment, yes.
Well, all right, so I'm the employer. I love this because now I'm going after, I did it for retention, I did it for recruitment. I'm happy. The morale of my employees now is great. I love it. What now can I come to? Can I, as an employer, can I deduct these premiums on these benefits?
If you're paying them on behalf of the employee, yes. Depending upon how the business is structured, C Corp, S Corp, partnership.
Oh, so does the entity matter?
Yes, it does. It does. Let's look at a C Corp, for instance. The owner of a C Corp has the ability to pay premiums for the employee. Those premiums are 100% deductible to the business owner.
Because he's paying the whole thing.
Correct. And for the employee, he or she does not have to count those premiums as part of their income.
Okay, let's stop there for a second. I just want to make sure we understood that. So I have a C Corp. The employer is picking up the tab for all of his employees, as far as the LTC is concerned. And on top of that, those benefits could come benefit-free, tax-free.
Income tax-free, correct.
And this is not included as part of a taxable perk on my W-2 as an employee.
That's correct.
Is that correct?
It is.
Well, that's huge.
It is. And
that's huge.
So let's talk about potentially why that's happening. When we look at where the number one cost comes from today, who's actually footing the bill for much of what we see by way of long-term care expenses in this country, it's actually Medicaid. And now we've talked in earlier shows about what that impact means, loss of control, loss of flexibility. Essentially, if somebody has a care event and they can qualify for Medicaid because of their low income threshold, they essentially have to go wherever the Medicaid system is telling them to go. It's not an option for many. But today, it stands as probably the number one payer of long-term care expenses. So the government steps forward and says, look, we want to try to do something here to take some relief off of that. And so you may recall that Senator Kennedy, before he passed away, tried to pass or implement something called the Class Act, which was going to be the government's way to help cover long-term care. Well, it never went anywhere.
It never went anywhere.
It did not. So there are many tax perks and credits that are given at the state level to try to encourage individuals to actually go out and look at private protection solutions such as multi-life long-term care.
All right, well, let's say, but there's a lot of small businesses around that are S Corp and LLCs.
Yes.
Give me a little kind of a rundown. What's this? It's going to be different, I know.
It will. It will, especially if you're talking about a business owner who's a 2% more shareholder. Because for that individual, they do have to count those premiums as income. It's still deductible to the business, but depending upon where the employee falls in that S Corp, those premiums that are paid on their behalf may or may not be income taxable.
Would that be the same for LLC entities?
Yes.
So they're treating the S and the LLC similar?
They are.
No, okay, so I'm wondering, if I'm a small business and I've been toying with the separation of powers, I don't want to, because an S Corp is a pass-through.
True.
maybe I'm going to look at C Corp because it seems like I'm actually getting a little bit more benefit by going this way. I need to examine a possibility. Of course, again, I always recommend talk to your attorney first before you do anything and get his idea. But strictly from a balance sheet point of view, from a business point of view, from a deductible point of view, I need to look at the differences between my LLC, my S Corp, and my C Corp to see what is the benefits of each one. And especially if you're doing a startup company. Maybe you broke away from another company. This is a good time to look at these things.
Yeah, it sure is. We talked about long-term care planning being top of mind. We've talked about multi-life solutions, and really there being so many different ways to go. Employer pay all, employee-employer share, or employee pay all. Those are things to take into consideration when you're offering this type of a benefit.
You've been in this a long time. What is the trend, would you say, for an employer? Are they splitting, sharing the premium?
Yeah, the sharing is what I see the most of. So the employer will put some in and the employee will put some in. But we've also seen instances where there's an executive approach where the employer may offer this as an executive benefit, and certainly we've had many cases where it's employee pay all.
When we're into multi-life or group life, is this under any government jurisdiction like ERISA or something? Is there any oversight of this, or no, this is really separate and this is a standalone group or key man?
Yeah, this is standalone long-term care insofar as I've seen it. Now, there are some carriers, especially some carriers through the mid to late 90s, that offered true group, thousands of employees on one group plan where if they left the company, it stayed behind. But what we're talking about here, this new emerging market, 5-year plus emerging market, is the multi-life space.
So is that past way of doing business with long-term care, is that kind of off the table now?
Not many very carriers are offering that true group opportunity, so multi-life is what we see more of.
So people are looking at multi-life because it's portable, and you can kind of customize your
more
own.
Flexibility, plan
gives the
design.
executive some place to go with that. Wow.
Yes.
I love the flexibility. When we come back from the break, we're going to talk about the tax advantages of long-term care in the business market, and you can use that tax advantage to penetrate small business markets and sectors, because I think this is the way to go on this. I think that show people the benefit. And don't forget, you can request your long-term care manual from Backroom Technician at our website, downtobusiness.ashbrokerage.com, or just sign up for your own 30-day free trial for Backroom Technician at brtnow.com/trialsignup.aspx. We'll be right back, right after the break. Back in the day, life insurance professionals were called field underwriters. Then, carriers trained their field force in the basics of life insurance underwriting. Today, the insurance industry doesn't educate the agent population as they once did. But now you can have the Informed Risk Guide at your fingertips so you can illustrate a reasonable rate class for your life insurance prospects. Just request your copy of the Informed Risk Guide at downtobusiness.ashbrokerage.com. It's free from Ash Brokerage, the practice enhancement company. Well, welcome back. I'm Steve Savant with Maria Sarchi. And remember, you can watch all our episodes of Let's Get Down to Business, including my weekly consumer show, Steve Savant's Money, the name of the game. You can watch it at ashbrokerage.com. Just click on the show logo, and it'll take you right out to our homepage and all of our archives of our shows. And just a heads up, before moving forward with any of the ideas you hear in our show, always consult your tax advisor or legal counsel, as well as your broker-dealer compliance officer. Well, let's get down to business. We're talking about some of the tax advantages of long-term care. I mean, sometimes you have to front that because so many of us in the business market are so anal retentive on the issues of deduction and balance sheet items that that's more of an entree than it is talking about employee benefits, right? I just want to see the tax issues. But let's just talk about this because I see in my mind, I have a doc from Backroom Technician that breaks out C Corp, S Corp, LLC, partnerships. If you say, Steve, I don't even know where to go on that, and I have people that are interested, should we do C Corp? I can give you some information that can be great for conversation, that'll get you started. Of course, you need to always talk to an attorney on this, but to get you going to see the perks of different entities and how they play into group plans and how they play into what we're talking about today, multi-life. Well, I've looked at this now. I kind of like this. I'm kind of being sold on that there's some tax advantages here. I like to be able to tell a client, and this is where this is different, because in 401k land, in our thinking, I'm always thinking, yes, benefits come out, taxable. All the benefits that come out during retirement on my retirement plan are taxable, and they're in my Social Security provisional income test and could dicker with my Social Security benefits and their taxation. See, I mean, both sides. But now when I'm talking about LTC benefits, those are coming out tax tax-free benefits to me. Is that correct?
Absolutely.
Yeah.
Long-term care benefits, when they're paid to the policyholder, are income tax-free, especially in the reimbursement market. I want to be careful about identifying that as a separation. In the reimbursement market, those benefits that come are income tax-free. So there are some advantages here, not only for the business who's paying the premium, but for the employee who's receiving those premiums, but also when they receive their benefit. So it's a win, it's a win, it's a win, but it's really important, Steve, and I'm glad you brought this up, that the individual talks to their tax advisor, because state by state, there could be a little bit of a difference.
Well, I'm sorry, you just triggered a whole new tributary of thought in my mind. If I'm worried, I get the reimbursement issue of why that's tax-free, but what about indemnification policies?
Yeah.
Is that a whole different story?
It is. So there could be a portion of that money that could be taxable, because in the indemnification process, if I'm actually spending $2,000 or $3,000 a month, but I'm getting my full $6,000 a month benefit, there's a $2,000 or $3,000 difference there that you're taking as cash.
Is this a federal issue or a state-by-state issue?
Federal and state.
Oh,
so you
both.
really need to look at it from both standpoints.
Okay,
Yes.
so there's a universal, I'm sure, because of the Fed, there's a global view on this, and there could be, especially in indemnification. What about comprehensive? Because a lot of people go, well, here's my indemnification, here's my reimbursement, oh, and then there's comprehensive.
Yeah, so with comprehensive, we talk about the ability to pivot between facility or in-home care, having 100% benefit in both scenarios.
But is it indemnification on that side, or is it reimbursement, or could it be a combination of both?
It could be a combination of both. Typically, what we see is the reimbursement.
So there's good. I think I just heard from you. I might have to go to school on this. I might have to really do some research on this. So I have my indemnification could be a federal issue and a state issue when it comes to the benefit taxation.
Yeah, and what I would say is this. The reason why you buy long-term care in the first place is because you want to be able to protect yourself, to be able to have freedom and choice in where and how you receive care. So don't lose sight of that key driver when looking at some of these details. That's why you have advisors and professionals to help you with the taxing standpoint of it. But when you're purchasing this, you're doing it because you want to be able to financially and emotionally and physically protect yourself and your family.
Well, when we talk about contributory arrangements for LTC, for multi-life, do we have boilerplate kind of ideas? Because if I'm watching this show and I'm going, okay, I have a client, small business owner, and they already have I've already installed a 401k. I even have some disability in there. What does that contributory arrangement look like? Do we have specimen policies? Do we have boilerplates for this?
You know, we do. But in my experience, the most successful way that I've seen it done is where the employer says, look, I want to be able to offer this. Yes, I'm offering a 401k. Yes, we have some health benefits, but I also want to look at this long-term care. To have the employer actually go to the carrier level. And remember, you want to make sure you identify the right carrier for that employer market. But have the carrier help to design and work with the advisor on the plan itself, because they may be able to offer some benefits that the employer simply didn't know existed. So it's important to work with an insurance professional, to work with an advocate who can help them do the right plan design.
Well, there's another tributary of thought. You are creating rabbit holes in my thinking, while we're talking. Are there carriers specific to LTC that are they have a greater disposition towards corporate LTC, multi-life, executive life, rather than do individual? Or is it pretty much across the board?
I would say it's across the board.
So it's pretty similar.
It is.
So
it is, because remember, at the basis here, we're talking about individual long-term care.
So if we wanted an example of that for the show, if somebody says, hey, Steve, I'd like to see what that looks like, we could give them a carrier example of that.
Absolutely.
All right, now when you look at that, is this like the document, is this like the Obamacare document, or is this a pretty simple couple pages?
No, remember, this is individual long-term care. We're just offering it to more than one individual at a time. And because of that, we're able to look at potentially different underwriting and potentially some discounts on the premium. That's really the only difference.
Well, tomorrow when we get into this, because I do want to talk about census, data collection, how many people matter, the underwriting, am I getting any perks and credits because I'm bringing multiple lives to the table?
Yeah.
All that's going to be on our tomorrow's show, and believe you me, I will have many questions for Miss Maria because I want to know, and I know that you do too. Well, that's our show for today. Remember, you can watch all our online insurance commentary, advisor blogs, and articles on Producer's Web, as well as my answers to consumer questions on the Insurance Library. And don't forget, if you want to view any of our past episodes, just go out to our on-demand section located at downtobusiness.ashbrokerage.com. So if you want to follow me even further, head out to Twitter, Facebook, LinkedIn, or just email me, steve.savant@ashbrokerage.com. And remember, you could be wiser as an Ash Brokerage advisor. I'm Steve Savant. See you tomorrow.